it's like you fail when you give up. And this is like not my opinion, this is Sam Altman's opinion from Y Combinator, is that the primary determinant of success is persistence. And failure is when you quit.
Hey everyone, this is Prashant and I'll be your host for the VC Next podcast. And today we have Rob Liu with us. Rob is the founder of Athena VC, where he is aiming to help 500 founders from developing countries start their businesses by matching their salaries for 6 months. Rob is also the founder of Contact Out, a bootstrapped email prospecting tool where he has made over $10 million in revenue. In this episode, we talk about what is Athena VC, how they are matching salaries to back high potential folks to start companies, what they look for in candidates while evaluating them for the program, how they help founders find the right thing to work on, how is the Athena VC program structured, and lots more. So without wasting any time, let's dive straight in. This episode is sponsored by my own podcasting agency called Podcast 10x, where I help VCs start and run their own podcast. While I was running VC 10x, this podcast that you're listening to right now, I asked my VC guests, why don't you start your own podcast? I mean, it's the best form of marketing for VCs. As they say, VC is a people play more than even a capital play. A podcast enables you to put your people at the front, your portfolio founders, your partners, and co investors. It's a great way to build a brand and win competitive deals. It activates all your marketing channels in a single shot, be it YouTube or blog post or newsletter or social media. Everything gets activated in a single shot. And I get the same response from all the VCs that it's a lot of work and we don't have the time for it. I said, all right, let me handle the work for you, from pre recording, editing, publishing to making social media clips. All you have to do is show up on a call, hit record, do the recording using the well researched outline we provide you with, and you're done. We handle everything else. You know what they said? All right, let's give it a shot. So if you are a VC and want to up your marketing and branding game, I'd love to work with you. And if you're thinking there are too many VC podcasts already, remember there are way more VC firms out there. And if you're not standing out, you're losing out. So if you want to work with me on starting your podcast, go to podcast10x.com and book a call today. I'll add the link in the description and show notes below. Look forward to working with you. Hey Rob, so good to have you on the VC10X podcast. How are you doing?
Yeah, good. Thanks for having me.
Yeah, it's a pleasure having you on. To start things off, can we first have your story and how you started Athena VC?
Yeah, so I have been a founder for probably 12 years now. My main business is Contact Out, which is a prospecting tool where we provide emails and phone numbers to sales teams and to recruiters. So yeah, I've been doing that for 8 years. That's at around like 10 million revenue and 5 million profit. And like recently this year, I started like Athena VC with, our goal is to fund like 1 million founders in like the Asia Pacific region, and hopefully get more people from like working at a job into like starting a business by like offering to match their salary and having them keep like 90% of the equity. Whilst we guide them through like how to build over like a 6-month period.
Absolutely. That's a very interesting VC firm you're building there, right? So how did you come across that? Okay, I'm going to help employees turn into founders. How did you focus on that particular area for looking for founders?
Yeah, I think that right now, if we look at like founders that pitch VCs, maybe only like 1% get funded. Like a VC would review maybe 1,000, 2,000 pitches per year, and typically they'll invest in like 10 companies, or like the YC acceptance rate is like under 1%. So I think there isn't enough like guidance on like how do you come up with a good startup idea, and how do you like really like vet the idea, do the research, become an expert in an industry. So that's what like I kind of wanted to focus on, and I guess just make that transition step easier for people, where you know you wouldn't lose out on any income because you'd be making the same, will match your salary, and then you could try building out a company for 6 months, and if it works and you get like you raise seed funding, or we'll work with you to raise seed funding, then great, then you could start the company and grow it. If not, then just go back to your job, and it's nothing less. So like trying to provide more of a like a risk-free way to try it out, which I feel like that doesn't exist right now for folks.
Absolutely. Yeah, completely agree. And especially at the stage when employees are making the switch to try to being a founder, that's a very courageous one, first of all. And then also one that's a shot in the dark mostly for most people, because they're not very familiar with the startup world, with how how a founder works and how do you build out an initial idea into an MVP and stuff like that, and what's the right area to focus on. So a lot of uh, things there to figure out, right? So focusing on that, I think you're doing a great job there, and you being a founder yourself. So do you also have a similar story that you were earlier an employee and then transitioned into a founder yourself, and what were the challenges that you personally faced when you made that switch?
No, I've been a career founder. The first two jobs I held, I got fired from, because I guess I'm just too antisocial to hold down a job. But I think the first angel check that I did receive, so like my business is mostly bootstrapped. We only like raised a total of 30,000 US funding. Um, but I think the first angel check that I received made like uh, quite like a big impact on my life, in that if I didn't receive that check, I might have spent maybe another 3 to 5 years like working in corporate, or working a job. Um, and I think really it's like it's a small amount, but it's just that like first check that gets people to try it out, being a founder, whereas they wouldn't have otherwise. Because the later checks is just like, okay, well, if you're already building a business, then a lot of the times you don't actually need money to grow. It's more just like hard work. But I think the first check like makes a big difference.
Absolutely, totally agree. And that's the angel stage, and that's why it's called the angel stage, because some angel is going to come and support you at that stage to take that leap, right? And so like you said, you were the kind of person who would not fit in a job, right? You got fired, right? But you are a successful founder and now turning into a VC. So when you are looking at these people and evaluating them, what are the key factors that you're looking for in them? Because some of them might not be a great fit for a job, or might not be doing great at their jobs, but might be good entrepreneurs like yourself, right? So how do you identify them?
Yeah. I guess what I look for would be quite different from what other VCs look for. For example, if you were to apply to like Y Combinator or to any other startup accelerator, they would look for you having expertise in an industry, and then you pitching an idea where it's like quite new, and the solution or idea is like significantly better, like 10 times better than like existing solutions. Whereas I want to focus more on like people that don't necessarily like have an idea yet, or perhaps they don't even have expertise in a particular industry. Really like what like we're looking for is just uh, builders, so like people that are technical, they have built stuff in the past, whether it be software, hardware, or like even biotech, um, and then they learn really quickly, being evidenced by they like read a lot of books, they listen to a lot of podcasts, or like go through like online courses. So yeah, like pretty simple. It's just can you build? What have you built in the past? And how many books, courses, and things have you read in like the last year, and what have you learned from that are like some of the things that we ask.
Yeah, surely that's quite interesting. And talking about the Athena VC program, so tell us more about it. Like who can apply? Who are the right people to apply for that? and also what does the real program look like once a candidate gets selected for the program?
Yeah, so anyone can apply. We're typically looking for people who are early in their career who would have, let's say, between 1 to 6 years of like work experience. But really, anyone can apply. Would typically like match like salary up to right now we're targeting mostly like the Southeast Asian countries, so we're matching salary up to like 50,000 USD. But we will be moving into Western countries soon as well, so that might go up to 100,000 for some of the Western countries. Um, the program is structured in a way where we would work with founders to help them develop expertise in an industry and to help them come up with an idea or a solution that is like 10 times better than what's currently available. So in terms of a simple breakdown, there's like five like main like tasks. The first one starts with um, picking an industry or an important problem to solve. And that starts by like learning how to be a good investor, because if you're going to be a founder, you actually are an investor. You're investing your time, like 5-10 years of your life, which is more valuable than money. Yet like a lot of founders just dive into the first thing that they think of, or maybe like it's the third idea, or like it's like less than 10 ideas. Whereas, if you're an investor, you would look at maybe 1,000 ideas a year, 1,000 companies pitch you every year, and you invest in like five of them, maybe max. So getting back to like what do we actually do? Well, the first stage is like, let's look at a couple hundred investments that Sam Altman or Peter Thiel or Y Combinator or other like top investors in the world do. Let's study their website, study the TechCrunch articles and media about like, why is this company unique? And after you've seen like a couple hundred of these, you get a really good idea of like, what does a good startup idea actually look like? And then you have a better frame of reference to assess, hey, am I working on a good startup idea? Then from there, and obviously like you got to consider like, what are you good at, what are you passionate about, and what problem is personally meaningful for you, so you would actually want to commit your life to doing this. And then from there, then you work on like developing expertise in that industry, right? So you would study every company in the particular industry, or solving the problem that you chose, or adjacent problems, or just study like 100 companies in your industry on Crunchbase or on Y Combinator, where if these companies have, especially the ones that have raised venture funding, not to so much like copy them, but more to take the best of what everybody is doing, and then put that all together to do something better. I think Austin Kleon said something like, originality is stealing from 100 different sources. And this is the same as what like Steve Jobs did, right? Like like Apple, they copied like Xerox for the graphical user interface, but then they improved it, right? They added like overlapping windows, they added drag and drop, they added a mouse. They did a lot of things to like make it better and more user friendly, but they started by copying. And from there, you develop further expertise by clearly like talking to users, like talk to like 100 users, and then talk to mentors. So we have a process for like reaching out on LinkedIn to, we find that ex-founders or ex-employees of competitor companies are a lot more open to talking, because they're not in the industry anymore, and they're happy to share their past experience. So our approach is to offer like consulting fees, like maybe a few $100s for people to share their advice and their experience. And in that process of studying 100 companies, talking to 100 users, talking to maybe 50 industry insiders over like a 6-month period, you would develop expertise and become an expert and be able to come up with a product or a solution that's like 10 times better than what's currently available. And once you get to that phase, then we'll like work with founders to pitch like seed investors and to like tap our network and to raise funding and scale from there, as well as like working with founders to like help build products. Like we have like designers and engineers on our team, so we'd work with founders to build out the MVP.
Right. That's very interesting. So, is this like a 6-month program, right?
Yes.
Got it. Got it. So, how much of the time in that 6 month is spent on doing this call and customer research and market validation, and how much is spent on the actual execution once you have nailed down on one thing you want to focus on?
That's really dependent on the company. Um, but generally, like we like to uh, I guess we like to choose a path where it would like maximize like learning, um, like maximize like de-risking the idea or identifying, hey, whatever is the biggest risk, um, with the least amount of effort. So if we can validate through customer interviews, uh, and pre-sell the product. Let's say we can make a pitch deck and we can get customers to sign like a letter of intent or to sign like a purchase agreement without actually building the product. We'd prefer to do that. Or if we want to see, hey, does somebody are people interested in this if it's a consumer product? If we can just build a landing page on a landing page builder and get people to like sign up to prove that there's interest before we actually build the MVP, would prefer to do that. Or when we actually get down to building, then we'd rather like spend a lot more time talking to users to be like, okay, what is like the absolute most valuable thing out of everything that we propose, and we'll start with like just crappy wireframes, show these to users, be like, hey, is this the thing? And then we'll identify like, okay, what can we build in a week that gives like 80% of the value? So what's the smallest thing we can build that gives the most value? So yeah, to answer your question, like most of the time is spent on talking to users, on validation, and on things that uh, allow us to learn the most while spending the least amount of time, which typically is not building. We build when we're like sure of what we want to build, which in the first like 6 months, it's mostly learning and like as much building as is needed to learn.
Absolutely. Yeah, that's great. And so you mentioned how you're focusing on people who have been working in the industry for about 1 to 6 years, right? So why that focus on young folks in a way?
I mean, it's really anyone can join. We focus on like younger folks because I think when you're young, you have like more flexibility to take risks because you don't have a family to support. Your lifestyle hasn't gotten expensive yet, where you're like comfortable in your like cushy job or high paying job. Um, and I think that is like the right time to that's a good time to explore. Not saying that like people that are older uh, can't do this. They definitely can, but if you're making like 100 grand a year or like 200 grand a year, it is harder to like step away. So it's more on the individual. Like if you want to step away and try out like being a founder, then yeah, anyone can do it if they want to do it.
Absolutely. Yeah, I completely agree. And I love your approach to doing it. It's hyper focused on the customer research and talking to users and then building the product and getting pre sales and then reacting to that, right? So that's a great approach there. And I would love to learn about your risk as a VC here, because this is not the typical founder class, because as you probably know that VCs love repeat founders or founders who already have some sort of vision, and there is like investing in lines and not dots, if that resonates, right? That they have been doing something already in the space and now they have an insight and they're going to build a company around it, right? And your approach is quite different from that, that you are picking promising folks and helping them find the thing that they want to build and then build it, right? So what's the risk percentage, and is that a higher risk business than what other VCs are doing? And if you could give us an insight into the failure rate of the folks, because these are not founders, right? They have to become founders, and founders have specific traits: perseverance, persistence, being some of those which are very different from being an employee and getting a consistent paycheck, right? Because even when they work with you, they're still getting a paycheck because you're matching salaries in a way, right? So do they still get the feel of, we are taking a risk, and this has to work out, right? So gives an insight into your risk profile there, that how risky is doing this kind of investing, and how many of it actually works out and how many of it doesn't.
Yeah, I think so. Two questions. Like what is our sort of portfolio construction, and how many like founders work out or don't work out. I would say that out of the people that I know that have stuck at being a founder for, let's say, a 5 to 10 year period, definitely out of 10 year period, um, there is literally no one that I know that has stuck on this for 10 years and is not making at least $500,000 in profit. Um, Now, like some of these folks have taken, so where people get caught up is if you raise like, I don't know, like $2 million and now your business is earning like $1 million revenue and your burn rate's quite high, then you walk away with nothing and you put in 4 years hard work. But if you don't raise that much, like let's say you raise like 100 grand or less, there's like a lot of my friends that have done that, and literally there's like no one that I know that's stuck at it for like 10 years that's not making at least $500,000, which is more than enough to like live off. So I think the failure case is not, it's like you fail when you give up. I think and this is like not my opinion, this is Sam Altman's opinion from Y Combinator, is that the primary determinant of success is persistence, and failure is when you quit. Um, there's no external failure. It's like you quit. If it's like, okay, your business idea didn't work out, great, try a new one. What if what if you try 50 things? Like one of those is going to work out, even if the failure rate is like 90%. Great, then try like just try 50 things. Then either way, it's just how much time you put in. And then in terms of like our like portfolio construction and returns, like we are not trying to be a VC. We are not like aiming for returns. What we're trying to do is create a alternative to university for people to learn entrepreneurship. Um, where so the funding part is like our fellowship program. That's like targeting a kind of minority. We have like a weekly like ask me anything session and weekly like founder focus group where like anyone can join, um, and then anyone can follow this process of like studying Sam Altman's investments, of like studying 100 companies, of talking to mentors, of talking to users, and we have prizes for doing this. So if you talk to 10 users and you record the calls and you post it on your LinkedIn, we'll give you $100. And we've given away like tons of these prizes already, and we encourage everyone that participates in this to build in public, so they can like build their brand, they can build an audience, but along with that, it helps spread the message to get more people building, to get more people like building in public, learning in public, and we're trying to like create, I guess, just a really actionable like curriculum on like how do you do this, how do you build up expertise in an industry, and come up with a product that's 10 times better to start a company. And the end goal is we'd want to get like 1 million people to start companies in the Asia Pacific region, um, and to do that as like an alternative path to university. And we'd want to have like people form like groups like every week. Like right now it's virtual, but we're doing in-person meetups as well, where just get together with like eight other founders, like discuss challenges, share experiences, and we have like mentors like coming in to do like ask me anything sessions, like guys that have raised, let's say, like 50 million plus, or built their business to like, I don't know, 100 million revenue, etc. Lots of different folks, or like guys working on deep tech as well. We got a guy building like a neural model for the brain, where it can scan your brain waves and it can tell you what you're thinking. As a YC founder, yeah. So that's what we're trying to do.
Yeah, that's very interesting, and I love what you're doing. Incentivizing people to learn, and that's very rare to see. But would also love to understand the business model here, because there has to be some way for you to get back
Mm.
also. So is that the investing part, that okay, you're going to invest in the most promising ones out of that come out of that, or is it something else?
Yeah, it is an investing part, and that's like reflected in the the funding amounts and the valuations that we provide, because our check size is typically like um, go from anywhere from like 10K to 25K, which is very small. Typically, it's like 20K. Um, which it's a parallel to like what YC was originally when Paul Graham wrote like a 15K check. Um, and because we're at like a valuation that is like 1/10 of Y Combinator, um, uh, that allows us to take like 10 times the amount of risk. Whilst Y Combinator might accept like 0.5% of applicants, and you already need to be an expert in a space and have like a really compelling business idea. I mean, I had a friend of mine who he raised $40 million from Sequoia for his previous startup, and he got rejected from YC. So it just goes to show like how high the bar is set right now. Whereas because we're like, okay, our hypothesis is that we have like a lower valuation amount, a lower funding amount, there are still tons and tons of people that would happily take that because it's better than working a job. It's just like, hey, if we match your salary for 6 months, it might be like 20K. If you're based in some of the Southeast Asian countries, and you keep 90% of the equity, so you have nothing to lose because right now you have like I don't know like 0.1% equity or 0% equity, and you get the same salary. So we're just like, okay, you make the same and you get 90% of the equity. So we're targeting basically everyone that can't get into YC. Like if you can already get into YC, you're already an expert in the industry, you have like a great product, you've got traction, or you already have like a clear idea of like what am I going to do that is 10 times better. Then great, then you go into YC. But for everybody else, that's the audience that we're targeting. Just like how if you come out of YC, then some people raise at like 100 million valuation. If you can have the metrics to like I don't know raise like a Series B or a Series A, etc. So we're just going one stage earlier.
Right, understood. So these are the standard terms that you're going to match their salaries for the 6 months, and in return for that, you're going to get 10% equity if that materializes, right?
It will depend. So we would
Mm-hmm.
go from I mean we would go from like 4% to 10%. Typically, yeah, it would be like around the 10% mark.
Okay, got it. And I would believe the company is, if the founders find an idea, the company is registered somewhere in between those 6 months, right? Is that correct?
That's correct. Yes.
Okay, got it. Yeah, very interesting. Awesome. So this looks like an awesome program. And is this like an all online program, like you mentioned?
It is online.
Yeah.
Just because our team with Contact Out is fully remote. We're like
Mm-hmm.
across 17 different countries. Um, we do have in-person meetups in that we try to start cohorts where the founders are in the same city. So with our like weekly focus groups or Ask Me Anything sessions, there's the option to do that in person. And then we also have retreats where we would have everyone get together in like a co-working, co-living location, be it in like Vietnam or Bali or one of the Thai islands. So it's a bit of a hybrid there.
Got it. Very interesting. Awesome. And so let's now talk about the portfolio construction approach. How do you think about that? Because you're picking up promising folks without looking at what sector they are operating in, or mostly also the region as well, right? Right now you're focused on uh, South Asia, uh, but still that's a decently broad focus. So do you have any sort of buckets in terms of portfolio construction, that okay, we are going to focus on this area and have startups that are built in these sectors, maybe fintech, maybe construction tech, or some other sector, right? Hardware, right? So do you have any sort of focus that, okay, we want these many startups in these areas, or is it like pretty much open for everyone?
Yeah, I think that that would be a decision for the founders that we work with, and that is informed by like studying. If you study 100 investments from Sam Altman and you study 100 investments from Peter Thiel, you'll get like a really good idea of like what industries and sectors and types of companies are successful. Um, and like it's not, it's not typical of what people think. Like lots of people go into SaaS, right? Whereas the top 10 most valuable like companies out of YC, for example, none of them are SaaS. They're like marketplaces, they're like transaction companies, they're deep tech companies like Cruise. Though, like having said that, like SaaS has like the best chance of getting over $1 billion. It's like 31% of YC companies over $1 billion is SaaS. Um, Typically, what we look for is, I guess, just people solving a meaningful problem. Just be useful. Like make something that's actually useful to the world, as opposed to like it's just a play to make money. And target a global market. Um, I think targeting a regional market um, is not ideal. It makes your life harder. Why not target the entire world? Because you can do that, and then you'll have like a much larger opportunity. And if you succeed, if you like screw up on that, and you just get like 1% of the way there, if your opportunity is like 10,000 times bigger, then you would still have a very valuable company. Whereas if you select a small opportunity, the bar is much higher. You need to execute much better. So yeah, we would target like SaaS companies, like global SaaS companies, hardware, biotech, like anything really, like nuclear fusion, drones. Um, but I think software is probably the like the most straightforward. I would say.
Awesome. Is Athena VC a typical VC fund where you have your own LPs and using that capital you're running the program, or is it like mostly bootstrap, like your startup is?
No LPs. It's
Okay,
funded with just profits from contact outs. So yeah, basically our own funds. We're
right,
doing small check sizes, so we'll probably be
right,
writing like 50 to 100 checks this year, which is not that much. It's like 1-2 million
right,
total for like 20K per check size.
right,
Um, just starting off with like proving out the model
right.
ourselves, and then once we get a track record, then like potentially raising from
Got it.
either the sovereign wealth funds or like the university endowments, etc. But you need
Right.
like a bit of track record to do that.
Totally, totally. Yeah, love that. Love that. How uh, you're taking just the approach that you want your founders to take, that okay, first let's prove out the model, first see if it's working or not, and then go raise VC funding, or then go and build it out, even because you have some pre-sales. So it's sort of a similar approach what you're taking at Athena VC as well, bootstrapping it in a way with your own profits, and getting the deal flow in and doing those deals first, and then later on maybe showing the LPs that okay, we have got this in place. Now if you want to back us, you can back us, right? So great approach there, and it's very rare to see in this space, right? Because you're a successful founder, and you could have easily gone out and raised a fund directly as well. That was certainly a possibility, but it's great to see that you're taking this approach, that proving out this model first uh, with limited capital, and then moving to LPs. So kudos to that. And one more thing that I see you pushing a lot inside the Athena VC program, and as well I see you doing yourself as well, is building in public, because you run your own YouTube as well with a sizable number of subscribers there. You also have a good following on LinkedIn, right? So you share a lot of stuff on these platforms, and you also uh, push your founders to build in public, because you feel that can really help their business. So can you throw more light on that, why that is so important to yourself as a founder firstly, and then why do you think it's great for business, even for the founders that work with you?
Yeah. Well, I think it's pretty simple, really. It's like if you want to get customers or if you want to get like investors, you like need an audience, and you build an audience by like sharing what you're doing, by like sharing your story, sharing your products, sharing your ideas, and I kind of struggled with this before because I was like, okay, I need to make some like very polished content or like whatnot. I need to make it like really good to present it in public. But then I switched my mindset to like, instead of writing in like Notion or Evernote for like my rough thoughts, just anytime I have like an idea or I learn something, I will use like LinkedIn as my like notepad, and I'll just like post it like whatever like random stuff I learn or whatever just comes to my mind. I'll just post it and I'll just schedule it so I have like a post go out every day. Um, and I think even though initially there's a lot of hesitation to do that because I was like, okay, is this idea good enough? Is it not? I think like not everyone would like it, but I think a lot of people do appreciate more like just authenticity, and they want to like just hear, okay, like what is like people's stories. I think that's always like fascinating. So yeah, I've definitely found it like really helpful. And it's a bit of a growth hack as well because we sort of have this thing going on where it's like, okay, if you share your learnings, post it on LinkedIn, and then you tag like Athena. We have this thing where we like encourage people in our community to give feedback on other people's ideas, not only so they can like the main thing is like so they can learn and share ideas, but also like they will boost each other's social media following because you'll get your posts like promoted. The more activity, the more comments and stuff you have on it. So in a way, it's a growth hack as well.
Right. Totally agree, and love that approach. And the last main question before we try to wrap this up, and this is about what's your vision for Athena?
Yeah, so the goal is to fund. Sorry, let me step back a little bit. So I came across like something that Mohammed Yunus of Grameen Bank said, which is really cool that he's now the leading Bangladesh. But anyway, he said something like 50% of university graduates in the Southeast Asia region can't find a job. Um, and he questioned like you have McKinsey and Goldman Sachs and these like big companies going to universities telling students about, hey, you should work in corporate, but you don't have any VCs going into universities telling students, hey, you should start a business. These are all the funding options. These are all the things that you can do. Why don't we have this? And Mohammed Yunus thinks that like entrepreneurship and getting more people to start companies is how we solve um, the unemployment problem, the development problem, and just how we create like trillions of wealth in the region and to develop it to like a first world standard of living. Um, so that's really what we're trying to solve. So we want to fund 1 million founders to work on meaningful problems, to build businesses, so we could create like ecosystems and trillions in wealth and yeah and to to work on like what Dr. Yunus was talking about.
Absolutely, yeah. That's a beautiful idea right there, and love that you're doing this. So now let's do the rapid fire round, wherein I'll ask you 6 quick questions about the investing you're doing. Hopefully, all these questions are relevant for you. If any question is not, you can let me know. So the first one is, what are the sectors and regions you invest in?
Any sector, global business, so global focus, not regional.
Got it. And what's the typical stage of investment?
Angel first check.
Uh, do you lead rounds?
Yeah, first check, so only check.
Okay. Typical check size.
From 10K to 25K.
Got it. So this is the salary matching part, or is this like
Yes,
separate
that's
from
correct.
that?
Salary matching part.
Got it. Got it.
So salary
Uh,
match for 6 months, like whatever your salary is, up to 50K
mhm.
USD. Then half of that for 6 months is 25K.
Got it. Got it. Where can people who are interested in your program get in touch with you?
Athena.vc.
Awesome. Where can our listeners follow you?
Same on YouTube. If you search for my name, Rob Liu, ROBLIU, or if you search for Athena.vc on YouTube, you can find a lot of our content. Or just at Athena.vc. On our website, we'll have like lots of like curriculum and resources. So we've gone through, I don't know, maybe 1,000 startup resources, and we've collected the best ones that are the most actionable, and we've put together like a 12-month curriculum for people to study at their own pace.
That's awesome. I'll make sure to put all those links in the show notes below. Thanks so much for making time for this, Rob. You're doing amazing work, and I wish you all the best.
Yeah, thanks so much for having me, Prashant. Really appreciate it. And yeah, no, I enjoyed the questions.
Thank you so much. My pleasure.